This is not an emergency fund, and I want you to remove the concept from your mindset. Welcome to today's video. We are going to go through a step-by-step process in how to build and fund yourself an emergency fund so that you have peace of mind for yourself and your family. Thank you so much for joining me here today at Sisters for Financial Independence. I'm Catherine Akop-John, and I cover topics related to money, motherhood, and everything else in between. You might have heard the word of an emergency fund being thrown around, but aren't sure what it is. We're going to break that down so you know exactly what to open, how much you need to fund, and how much better you'll feel knowing that you have security for your family. Step one is to know and understand what an emergency fund is. An emergency fund is basically a whole load of cash that you are going to put to the side to cover unexpected expenses. Unexpected expenses can be a whole range of things. It could be for medical reasons. It could be due to a job loss. It could be for repairs that you are not planning for. Now, an emergency fund is basically your safety net so that you are not putting expenses on high interest credit card or loans that will take you a while to pay back, or that you are not withdrawing from investments that is earmarked for your future self. An emergency fund is also about buying peace of mind. Yes, money can buy tangible stuff like a new couch, a new TV, but having money set aside can also bring about some safety, some financial security for yourself as well as the people in your household. An emergency fund can help you sleep better at night. It can reduce money fights with your partner. It can relieve stress, and it can provide a better future for you and your family. I want to emphasize here that the emergency fund is for unexpected expenses. So if you feel like you are running into a lot of unexpected expenses, I am going to recommend a strategy that you try. And that strategy is to actually create an annual budget. And this is where you are going to list out your budget for the whole year. It's not going to be exact and it's not going to be right on the cent. But what you want to do is just start tracking some of the expenses that you're expecting for the year. This could be summer camp for kids. This could be your vacation. This might mean accounting for car maintenance. This might mean accounting for a possible roof repair. The goal of your annual budget is to plan as much as possible. When you plan for your money, it can relieve some stress. It can allow you to figure out how to allocate your paycheck so that it goes in the right location instead of you scrambling each month to figure out what you can pay and what you have upcoming. To give you a concrete example, sometimes car repairs can fall under an emergency fund. But knowing that we drive our car for work every day, it might be helpful for us to be planning on putting a separate savings account for car maintenance. Knowing that this is going to come up each year, knowing that we're going to have to shell out money for oil change or a tire change, it's important to plan for this so that it doesn't become an emergency at the last minute. So in this scenario, when it comes to car maintenance, you might have a separate sub-savings account where you're going to put a little bit of money each month for that car maintenance. That way, when the car maintenance repairs happen, you don't need to dip into your emergency fund. Another example where you might need an emergency fund is if you have a job loss. Job losses can come suddenly, and that loss of income can shock your family. An emergency fund can be there to help you ensure that you are paying your bills on time, making sure you have food on the table when there is no income. Now, what constitutes as an emergency is going to be subjective, but the more you plan ahead, the more you anticipate expenses and save for those, the better, as it will also reduce the chances of you tapping into your emergency fund. I have linked a video in the description that walks you through how to do an annual budget. Of course, we can't plan for everything, and this is why an emergency fund is necessary for everyone to have as part of their financial planning. Step 2, to help you build and fund your emergency fund, is to set a savings goal. Decide now how much you want to save. A common goal is to save at least 3 to 6 months of essential expenses. So what you will need to do is to look at all of your expenses based on your budget, and you are going to look for things that are essential. This is basically going back to what's called a bare bones budget, which means you want to save for things to pay for things that will help you survive. This will be your rent or mortgage. This will be for food. This will be for transportation, prescription, as well as insurance. This is your baseline budget, and that's what you're going to do to save up for so that you have an emergency fund to cover those expenses. like anything else, the 3 to 6 months of essential expenses will vary depending on your family situation. If you rely on one income, you might want to save a little bit more because the risk of losing that one income is going to be greater for your family. If you are in a 2 income household, you might be able to get by with 6 months of expenses, because if you are able to float your family on one income by doing a lot of cost cutting, that might be possible. So you have to look at your family situation to determine your savings goal. But once you determine your savings goal, stick to it and have a plan in place to reach it within a certain time frame. Most often, your emergency fund will be in the thousands of dollars. And I know that feels big, but your emergency fund does not happen overnight. It happens over a series of months and maybe years for you to stack up that cash. So what you want to do though is have mini milestones for you to reach. It might be $500 saved for the first month. It might be another 500 saved for the second month. You want to be clear with your goals. You want to have achievable goals, and you want to have a time limit so that you achieve them easier. Step 3 is to choose the right account. You want your emergency fund to be easy to access, but separate from your spending money, separate from your investments, and separate from your other savings goals. That way, you are not tempted to tap into it should something come up that feels like a good deal or feels like an emergency. You want to be thoughtful about where you want to put your money so that there's some friction and barrier before you can access it. The best option for your emergency fund is a high yield savings account, and you can find a bunch of them online. The online high yield savings accounts typically have higher interest than the regular savings account, and you can still access your money quickly. When you are looking for these high yield online savings accounts, you want to look for an account with no monthly fee, no minimum balance, easy online access, and you want to make sure that that company and that bank has the FDIC or NCUA insurance. That means the government has backed that company and your money is safe. I'm going to recommend 2 banks for your emergency fund. Now, this is not sponsored, and this is based purely on my experience. Number 1 is Capital One, and the second bank is Ally. I have been a Capital One customer for over 20 years, and I can tell you that Capital One has moved with the times. They have an updated app. It's easy to transfer money. It's easy to set up recurring transfers. It's easy to access your money, but keep it safe and away so that you are not spending it, but while also growing it for your emergency fund. They both have similar rates right now, and I would also just want to caution you against continuously shopping for a higher rate for your online savings account. Many of the other online savings accounts out there do have a minimum balance. They will have different balance tiers for you to access different interest rates. So look and read the fine print. Make it easy for yourself. Do not get paralyzed by all of the information and not take action. Choose a online savings account that gives you a high yield of over at least 3% at this point, so that you can move your money and have it grow a little bit while you are continuing to save for your emergency fund. While it can be tempting to shop and find the best rate available, it's not worth overthinking and putting it off. For a $3,000 emergency fund, if you have it at a savings account with 4.2% versus 3.6%, the difference is really $18 at the end of the year. So instead of you worrying about that $18, work to figuring out how to get more hours at work, or how to earn more money or reduce your expenses. Don't let too many choices prevent you from taking action. Step 4 is to go to your chosen bank or credit union's website to open your emergency fund. You'll likely need your driver's license, a social security number, and some basic personal information like your address and phone number to open your account. Don't put this off, get it started. Once you open your account, you are going to rename your savings account into an emergency fund savings account. You want to be strict and clear with the name so that you know you are not going to touch it. This is a view of my personal Capital One account, and here I have emergency fund and I have other sub savings accounts to help me with some other planning goals. So I'm going to show you what that is in a little bit and explain why I have these other sub savings accounts so that you can also recreate that for yourself and have money designated for certain things. Note that when you define certain money for your emergency fund, your brain will automatically think that this is not going to be for me to touch. So make sure you specify the name of your savings account into your emergency fund. You want that clear and specific so that you are not tapping into it. If this video has been helpful, give it a like and share it with a friend. Is there someone else that you know of that could use a step-by-step guide to help build their emergency fund? I'm sure they will thank you later. Step 5 is to start funding it. Now, saving a few $1,000s can be daunting, but remember that you don't need to save that full amount overnight. You just need to be consistent with your habits of saving. The first thing you're going to do is to set up automatic transfers from your checking account to your savings account. This can be weekly, this can be bi-weekly when you get paid, or monthly, but you want to set this automatic process up. These automatic functions allow you to not have to think about savings. And no matter how busy life gets, no matter how many times you have to run to your kids' swim practice, you know that you are moving money to your emergency fund for the future. The next thing that you are going to do is create a personal rule for yourself whereby any extra money that comes in, a certain percentage of it is going to go to your emergency fund. So this can be 25% or 50% or however you want to define it. But for any extra money, you're going to immediately send a percentage of it to your emergency fund. So that means if you are getting a bonus, if you are getting a tax refund, or if you're earning some money maybe from a side hustle, specify what you're going to do with your money and then put that aside to your emergency fund. This will allow you to boost your emergency fund that much faster and allow you to stop thinking about your emergency fund once you've reached your savings goal. And the next thing that you're going to do to fund your emergency fund quickly is to actually cut 1 or 2 expenses, especially if these are recurring expenses. So for example, if you are going to cancel your Disney subscription and Disney costs $20 a month, you are going to immediately go to your savings account and start creating the automatic transfer every month for $20. That way, that money is immediately put back to work to building up your emergency fund. Do this for a few of your expenses. If you are negotiating in expenses, say you have a phone bill and you have just called them up and you've saved $20, $30, $50, that savings, use that immediately to put into your emergency fund. That way you have the continuous flow of money funding your emergency fund. Step 6 is to track your progress. Like any other goals, you want to be checking in to see how you're doing. So with your milestones, if you're doing it by dollar amount or you're doing it by date, celebrate your milestones. Celebrate once you've put in $250 in there, 500, 1,000, and make sure you get those small wins. Those small wins matter as they can push you and motivate you to keep going until you have the 3 to 6 months saved up. Step 7 is to actually use your emergency fund for emergencies. Now, there's 3 questions that you're going to need to ask yourself when an event comes up. Is this unexpected? Is this urgent? And is this necessary? If you answered yes to all of those questions, then you likely will need to tap into your emergency fund. If not, you are going to need to find alternatives to solve your problem. Don't default to spending money. Instead, you might want to just wait a little bit to see if you can find a way to earn more money. You might want to ask around to see if you can solve your problem differently. Don't just automatically get that money out to pay for whatever event has come up before you have had time to think about it. The point of the emergency fund too is to give you that cushion so that you are not making panic decisions should something happen. It should give you that peace of mind knowing that you can take your time to make a decision as well as have the funds in place should you finally actually need it. Now, I mentioned earlier in the video about planning ahead when it comes to expenses. This can be super helpful to help you reduce the other emergencies that come up. And what I like to do personally is to actually create other savings accounts, like in this example here, where I will set aside certain amounts for certain things that I know are going to come up for the year. Like I know my daughter will go to camp in the summer. So starting every year, I have a recurring transfer that goes to her summer camp so that doesn't caught us off guard. There is a car maintenance line item. There is an insurance line item that comes once a year so that you are prepared ahead of time and have some funds at least saved up for those kinds of expenses. Now, I want to also note about job loss. So, if you do lose your job without warning, of course, you can dip into your emergency fund. But before you dip into your emergency fund, go first on a bare bones budget. This is where you are going to cut as much as you can, eliminate those wants, and really only focus on the essential expenses like your food, transportation, prescriptions, and insurance. Because if the case that the job loss continues and you don't get income, you want your emergency fund to last as long as possible. And in order to do that, you want to optimize your expenses ahead of time. I'll have another video under the watch next section so that you can check out how to do a bare bones budget. Step 8 is to, of course, refill your emergency fund after you have used it. So again, this is going to take time to rebuild that emergency fund, but hopefully your emergency fund has helped you not have to access high interest debt or take out loans or take out investments. So you want to go through the process and start creating those automatic transfers to start funding and refilling your emergency fund back up. At some point, once you do hit your emergency fund amount goal, you can turn off the automatic transfers. But what I would recommend is instead of turning it off, just redirect it to another savings goals. That way you don't put that money back in your checking account and it doesn't feel like you have that money to spend. You're going to continuously save that money, not for an emergency this time, but for something else. And not having and seeing that money in your checking account can allow you to continuously build up savings in other areas as well. An emergency fund is one of the most powerful tools for financial peace of mind. Stay consistent, watch that emergency fund grow, and then watch your financial confidence grow. This time, you want to be using your money to buy you peace of mind. So use it wisely and stack up that cash so that you can reduce financial stress and protect your family. Thank you so much for tuning in. If this video has been helpful, consider subscribing to Sisters for Financial Independence. And if you need help with credit card debt, I'm going to recommend this full playlist, which has a bunch of practical tips to help you get that balance down. And to help you master your budget, this video is going to be for you. Thanks again for tuning in, and I will see you next time. Bye.